This is More Knowledge, More Wealth with your host, Gabriel Shahin. Gabriel is a certified financial planner and a registered investment advisor at Falcon Wealth Planning. This show does not intend to provide personalized investment advice through this broadcast and does not represent that the services or securities discussed are suitable for any investor. Investors are advised not to rely on any information contained in the broadcast in the process of making a full informed investment decision. Now here's your host, Gabriel Shahin.
Good day. This is Gabriel Shahin, certified financial planner, and your host of More Knowledge, More Wealth, here on every weekend, talking about all important topics of personal finance. Our goal is to give you the knowledge you need to increase your wealth. Now, to the listener, you can always reach out to myself or any one of my colleagues here at Falcon Wealth Planning. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird. Or feel free to send us a message that we can either answer your question by sending it at radio@falconwp.com, or we can play the audio message if you send an audio message on your phone to radio@falconwp.com. Now, folks, I'm the president of Falcon Wealth Planning. We are a fee-only, non-commissioned, true fiduciary where we talk about anything that involves a dollar sign, folks. That's where you are today: taxes, investments, estate planning, insurance, folks, you name it. Anything that involves a dollar sign, we can help you with. And folks, we are offering a free financial assessment where we can help relate this show to your specific situation. Give us a call. We got offices all over. We help people all across the country. We got offices scattered throughout, and our headquarters is here in Southern California. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird, where we can help answer the questions that you have, folks, that is stirring in your mind. And just like John from San Diego, California, he asked a question saying he recently sold a property that his family, his dad, had for 30 years. Let me actually just read it for you. My father recently sold a property that he's had for 30 years and sold it for $3 million worth, most of it being in capital gains. What can I do to reduce taxes? Keep in mind, this gentleman, John, is in California. So not only is there federal tax, but there is state taxes. So the question is, what can he do to reduce taxes? My goodness gracious, there's so many answers to that. But we're going to keep it simple, folks, because here's the thing. Capital gains is subject to a special taxation. Assuming you had the property for over a year, well, John's father had it for 30 years. In a situation like that, he is not only getting a preferred tax rate on the federal level because he held it over the year, but he also has to factor in depreciation recapture. Now, because this property has been depreciated, because it was a rental property, I'm assuming, was a rental property, he has to pay taxes on the depreciation that he's written off over time. Now, keep in mind, that is just, let's say they bought it for $300,000 and they depreciated down $250,000. They have to repay tax on what they wrote off, okay? In addition to that, there is the growth on the property. If the property is worth $3 million now and it was bought for $300,000, there's $2.7 million in capital gains tax. Just the capital gains tax alone in the state of California is $1 million. Yes. Not including the depreciation recapture, depending on their tax situation, they can be paying over $1 million to sell this property, whether they have a mortgage on it or not, because some people do cash out refinances. Whew. Crazy situation. Now, here's where it gets unique. You also have to factor, what is the taxation? What is the income? What is the taxable income of dad in this situation? John's father's income is important in this because, and his age is important. I'm assuming he's older because he's had it for over 30 years, but you have to factor in if there is any ways that you could save money. For example, if John's father is working, he could save and try to maximize as much in a retirement account. He could save in the state of California, not only the 37% on the federal level on ordinary income, plus the 3.8% surtax that they have, the Medicare surtax, but also the 13.3% California tax. Folks, we're looking at 54 cents on the dollar. Okay, now if you live in a state like Texas and you sell a property, all you have to worry about is the federal tax, because there is no state tax in Texas, in Nevada, in Florida, in Washington. Get what I'm saying? So let's not digress too heavy here. So what strategies are available for this person? Well, a very popular one for capital. Now, by the way, the first recommendation is assuming they needed a home, assuming it was a rental, assuming they wanted other investment property, they could have done something called a 1031 exchange. This is why it's extremely popular, this strategy to sell a property and buy a like-kind property, because you get to defer the taxes later. You get to pass them over into a new property. So that's recommendation number one. But let's talk about recommendation number two. There are some investment mechanisms that you could do through something called an opportunity zone. Now, the benefit of this is you could sell that property and your proceeds are $3 million and put it into maybe an opportunity zone investment or a fund or whatever the case may be. Now, you have to be careful. There's a lot of advisors out there selling some of these funds because they can get some pretty nice commissions of roughly 10%. Now, here at Falcon Wealth, we're fee-only, non-commissioned, true fiduciaries. So if you invested $1 million, you would invest $1 million. You wouldn't only invest $900,000 because you didn't have to pay a 10% commission. You know what I mean? So let's go in more. So if you have a $3 million and assuming they didn't need it and they're looking to save money in taxes, you could put that $3 million in an opportunity zone fund. Now, here's the benefit of that. You don't pay any taxes right now. You're deferring it. And as long as you hold on to the investment for 5, 7, 10 years, but if you hit that 10-year mark, I don't care about the 10% tax-free, the 15% tax-free. I'm caring about the 100% tax-free on the growth that you have from the 5 million. And let's just say in 10 years it doubles, because that's kind of the goal, to get that 7%. And it goes to 10 million. You get tax-free growth if you keep it for 10 years between that 5 and $10 million, between that, as long as you hold it for at least 10 years. That is substantial. And then you later pay the tax on what you deferred earlier on the $5 million of capital gains, or in this example with John's father, $3 million. So this is crucial. This can be very important, especially if you already recognize the event. Now, here's the thing. You only have 180 days after the property is sold or after the capital gain event is recognized. So you have to be very cautious of this. Some people are worried about the tax. And then here's the thing. If you're still working, if John's father is still making additional taxes or whatever the case is, well, that could be an issue. And the reason that could be an issue is because of the simple fact of you are able to look at your situation. You are able to see what tax event you're in now and what you may be in later. This could be crucial for tax planning because ideally you're in a higher tax bracket now, which is why you're not recognizing it. And later on, you might be in a different tax situation. By the way, folks, if you're just joining me, you're listening to Gabriel Shahin, Certified Financial Planner, and your host of More Knowledge, More Wealth. You're on every weekend talking about all important topics of personal finance. We are discussing with you on a question that we had from John in San Diego about his father's property being sold for a $3 million, or I assume $3 million capital gain in this example. And so how to reduce taxes, that was the biggest question. Had it for 30 years, how to reduce taxes. So the biggest thing, the biggest question is what's your income situation today and what it will look like tomorrow? So that is tax planning. And most accountants out there just do tax preparation. That you meet with them once, twice, maybe 3 times a year. That's a tax preparer, not a tax planner. And this person doesn't know every single thing about your financial situation. They don't understand the assets that you have, the debt that you have. They understand that you may have a mortgage. They don't understand how much is it, what your payments are. They don't understand how much you're saving into a retirement account. Which retirement account are you saving into? There is so much that matters, like your future Social Security, potentially pension, windfall elimination provision. Those who have it know what I'm talking about. So my point is this is why it's crucial to talk to a professional. And in a situation like this, just asking a simple question is, what can you do to save in taxes? Sure, 1031 could make sense. Sure, an opportunity zone investment could make sense to defer the taxes. But there are multiple other ways to do it. And we just don't see people doing that. Most of the time, they are just doing of what their heart and soul feels they should do. This is why they get stuck with the tax bill and they get grumpy. This is why they say they want to give their money to charity, but guess what? They give it at the end of their life. Well, there's no tax benefits at the end of the life. I'd rather have you do something today to get the tax benefits today. Get what I'm saying? Folks, if you need help with this, give us a call. This is something that we specialize in. We have done this hundreds, thousands of times. We've helped thousands upon thousands upon thousands of people. We have 800 people calling us a month. We are blessed to be in a situation where we don't have a lot of competition because we are fee-only, non-commissioned, true fiduciaries that truly focuses on helping you increase your net worth, which is why our specialty is tax planning. You may not know this. It's the biggest tax that you pay. Folks, give us a call. We would love to help. We'll offer you 1 to 2 meetings, 1 to 2 hours of our time at no cost. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird, where we could put together a personal assessment to help answer these questions for you. And factor in what makes sense. And I can't stress this enough. There are situations where other people are not, and I'll repeat, are not taking advantage of some of these tax benefits. They want to give their money to charity. God bless you for doing so. I respect that tremendously. But my job is to make sure you get the most money and not the IRS. And there are tax strategies you can do today. I don't care what your income is. We just had a client this past week who has a $50,000 taxable income. That's pretty low. And they have no kids, no heirs, no nothing. They want to give all their money to a charity, to a nonprofit when they pass. But there are tax strategies you could do today where you could still live off your money, where you could still have the income, where you can still have access, and you get a tax write-off today. Now, in this situation, this person has, between the both spouses, husband and wife, they have $250,000 in retirement accounts. Well, how cool would it be to take their net worth of $3 million, put it into a vehicle where they can get a $300,000 write-off, still live off the income for it because they have more money than they need, and then they still get a $300,000 write-off, which, oh, by the way, they can then do a Roth conversion, and that would be essentially a tax-free Roth conversion because they got a tax write-off by earmarking, not giving, earmarking the money to the charity, which, oh, by the way, they live off the income. Folks, so many ways to save money. If there's a will, there's a way. If there's a strategy, situation out there, I promise you there's a strategy. There's so many times I see that the IRS is winning. Listen, I've been kind of born into a sports family, played sports my whole life. And everything I look at is as a sport, winning and losing. And it's a competition, okay? And you have to play fair or you go to jail. That means you get excommunicated from the league, okay? You don't want that. So you have to win. And you're competing against, in this case, you can be ideally yourself. But there is somebody always against you. And in this case, I don't want to say it's the government because the government is supposed to be your friend. But in this case, it's the IRS because you have to pay them to participate. All I'm recommending is for you to save more money in taxes. It's your biggest expense. If it's not the IRS, then it's your property tax. You get what I'm saying? There's always a way. Folks, we're going to go on a quick break. We're going to be right back. We're going to talk about more tax saving strategies and also a little bit about investments when we come back after a few words. This is Gabriel Shahin, Certified Financial Planner, your host of More Knowledge, More Wealth. That's on every weekend. We're going over all important topics of personal finance. We're going over retirement planning, making sure you're prepared for retirement, Social Security and strategies, real estate, taxes, avoiding them now and in the future, investments, reducing fees, commissions, and so on, insurance, and estate planning. Folks, we are offering a free financial assessment that you could take advantage of. We have offices all across Southern California, including the Inland Empire. Give us a call to take advantage. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird, or visit our website, falconwealthplanning.com. That's falconwp.com for short. Enjoy the show. We look forward to serving you. Welcome back, folks. This is Gabriel Shahin, Certified Financial Planner, and your host of More Knowledge, More Wealth, here on every weekend talking about all important topics of personal finance. And today we decided to talk about a question somebody had about saving money on taxes. Now, there are ways to save money on taxes, but one is pre-planning, one is post-planning. What does that mean? So if you are, in fact, in a situation where you know you're going to sell a property, there are things you could do today with retitling properties, assuming that you are looking to live off income and not reinvest the property into another property, assuming that your situation warrants it. You could take advantage of a tax-exempt trust, which allows you to put your money where you get a write-off today, live off the income. And this is crucial. That can make a lot of sense for you depending on your situation. Because remember, there is no secret around taxes. But the way I look at it is we're all here in a partnership, and our partner is the IRS. And there's only one way to get out of that partnership, and it's to buy them out. And there is a way to do it on your IRA and retirement accounts, and there's a strategic way to do it when you have money in something that has high taxation. And the way I look at it this, your money goes three places. It goes to you, which makes sense. It goes to your heirs, or it goes to the IRS. You and the heirs are the same person. It goes to the IRS. The last person it goes to is charity. So you have to choose two of the three. So you are utilizing the charity bucket to your financial benefit, to your advantage. This could be a fantastic way, folks, for you to be able to get tax benefits today, live off the income, and still be able to help charity if that's something you're excited for. I've also seen people that have put their money towards setting up their own foundation. Now, there's two types of 501c3s, right? Two types of charities. There's an organization like the YMCA where you have employees, you're actually providing a service, so on and so forth. The other one is a foundation where you're distributing maybe 5% of your assets to people who need it, to scholarship funds, to people of need. This is another form to help. My whole point is this: if you could get a full-on tax benefit by putting your money into a private foundation and you're able to help people, the only loser here, the IRS. And so most people don't mind them being the loser. You get what I'm saying? So yet again, if there's a will, there's a way. You have to be able to play and be strategic with putting your money to work. Now, I'll take it a step further. I'll also say that not only is it to save money on taxes, but you have to grow your money as well. And the problem that some people have is you have to put this money in an account. Well, that account just can't sit there earning 0 point nothing. Some of you may be really excited to earn 4% on 3.5% to 4% on a money market right now. But that's right now. It may not be like that forever. And so you do have to invest. And some people that are new to investing, that maybe like this person in San Diego, where their father sold a property after 30 years of owning, I made up it was $3 million. Well, they might not be comfortable with investments because all they know is real estate. So you have to understand how it works and how money works and what you should be doing. And you have to not be intimidated by the things you don't fully know, that you're not knowledgeable on. You have to look at the history of it. And I understand real estate has a longer history. Real estate's been around as long as anybody can remember. That's all that people were fighting for back in the day was land. Everything is land. From 2,000 years ago during the Mesopotamia era to even 5,000 years before that. The idea is that I understand that your comfort level is real estate. In this situation, you would have to put your money into something that's more liquid, more predictable, and easy to value. And this is why the stock market is helpful in something like that. Now, you don't have to go choose individual stocks, right? Because companies can go to zero, but indexes can't go to zero. The S&P 500, which is the target index that most people look at, averages 10% rate of return. Now, the recommendation is to be globally diversified, to not have just the largest 500 companies, but the medium, maybe 600 companies, and the small 2,000 companies, is to have the total of the global US market. And then you want to add international to that as well, because you don't know what's going to happen. We could be seeing another 10 years like we did from 2000 to 2009, where because of the tech bubble and the 2008 financial crisis, $1 million in 2000 in the S&P 500 went to 900,000 by the end of 2009. In 10 years, you lost $100,000. So your money didn't even grow and it was eroded to inflation. But if you had a globally diversified portfolio, you actually doubled your money in that period. You get what I'm saying? So yeah, you may lose money on the upside, but you make money on the backside. Over time, diversification is the key. Now, diversification doesn't always work. What does that mean? Well, it always works, but there's periods of times where you maybe get punched in the face. For example, the S&P 500 might be up 10% for the year. Well, small caps have gotten really punched. Historically speaking, small-sized companies outperform large cap companies. Why? It's easier for them to grow. It's a lot faster to grow from $10 to $20 versus $1 billion to $2 billion. You get what I'm saying? So historically speaking, it does over a 12% rate of return. But because of the whole regional bank failures, small cap companies have significantly underperformed and done very poorly. So what does that mean? Do you get out of small caps? No. What you do is you get into that. I could argue it's a great time to do it. I'm not telling you to go buy and put all your money in there, right? I'm not giving any investment recommendation. What I'm saying is you don't want to be fearful. This is a time to be greedy. When everybody's fearful, as Warren Buffett says, that's when you be greedy. It's when everybody's greedy is when you should be fearful. And it's almost like the idea where in 2019, 20, and 21, tech companies did fantastic. But then last year in 2022, tech companies did extremely bad. They did poor. Why is that important to know? Because by the simple fact is that a lot of people sold out. You saw massive outflows of like the QQQs of the world and some of these other ones, of these tech funds. So what's happened this year? It's up 20%. Now, it's still significantly down from 2022 to now, right? Because if you have 100,000 and lost 40%, you're at 60. Who cares if you made 20% on the 60, right? You only made 12,000. You're still at 72,000. You're not back at 100. You get what I'm saying? You're still down 28%. But the point is you don't want to freak out. And in high interest rate environments, tech does significantly struggle, but it's recovering from what it did last year, which is why you never sell everything. Okay. By the way, folks, if you're just joining me, you're listening to Gabriel Shahin, certified financial planner, and your host of More Knowledge, More Wealth here on every weekend. Talk about all important topics of personal finance. And today we're just talking about the whirlwind of taxes and investments and putting your money to work. And there are ways to legally avoid taxes always. You can't have it all, right? You can't just say, Gabriel, you or Falcon Wealth, take this magic pen and just boom, make taxes go away. It doesn't work like that. So you have to be strategic with this. And as long as you know you can't have your cake and eat it too, it doesn't work that way. As long as you know you have to be strategic of how this stuff works, then you're able to truly take advantage of tax strategies. The issue is I see most people not doing it, not wanting to change, not wanting to affect anything different than what they've already done. But how are you supposed to progress? You know taxes are inevitable. You know there's nothing you can do about it. So how can you expect to have a different outcome when you don't change your input? So this is why it's important to talk to a professional, folks, to take a look at your situation and let you know what you should do. Not all financial advisors, just like not all properties, are made equally. You have to understand that each one has a niche. Now, our niche is tax planning. Our niche is investment management and overall wealth accumulation to make sure your net worth goes up. That's how we get paid. We get paid by making sure that we take a look at your situation, whether simple or complex, and making decisions to make sure your net worth goes up. Now, we don't quote a fee unless we can save you much more than what we quote you, but the fact of the matter is simple. Help our clients. So we are offering 1 to 2 meetings, 1 to 2 hours over time at no cost to help answer the questions that you may have to save money legally in taxes and make sure you are invested properly and not chasing the bandwagon of what may sound good right now. You have to be smart and diligent about this and understand Rome wasn't built in one day. And you have to take the ups and downs, just like in life. You can't only have happy times. You have to have the ups and downs to appreciate the good. And on top of that, you learn more from the bad times than you do the good times. It's human nature. It's natural. It's common sense. So factoring all of that, what are you doing now to better your current situation? Take a look at the negatives that are happening currently right now to see how can you make those into positives. Take a look at a high tax situation to see how can you leverage other mechanisms in your financial situation, whether it's real estate, whether it's retirement accounts, whether it's cash, whether it's charity, to make sure that you are maximizing the tax optimization to making sure you're winning and not the IRS. You want to do things legally, folks. You do not want to just make things up because you will get caught. The IRS may not be the smartest out there, but they're not the dumbest. You get what I'm saying? So do not play that game with them. You're going to wish you never did. So you want to make sure you're clean. You want to make sure you're smart. You want to make sure you sleep well at night because of it. All my point is you have to be strategic, and that's what we can help you with. We talked about tax-saving vehicles. We talked about just a couple of them. We talked about tax-exempt trust. We talked about opportunity zone. We talked about 1031 exchange. There's some oil and gas plays that you could do that gives you 85% write-offs on the front end. We talked about private foundations. You can even set them up. You could set up your own private foundation, which takes money away from your estate, which gets you a tax write-off. These could be ways to help significantly, assuming you're keen to giving part of your money away. But remember, you're either going to give it to the IRS or you're going to keep it yourself, or you're going to give it to charity. You can only choose 2 of the 3. You get what I'm saying? Some people prefer charity. Some of the billionaires in the world, the only reason, I hate to say this, maybe I won't say the only reason, but a big reason they give a lot of their money is because they're either going to give it to the IRS or charity. They're thinking to themselves, might as well make a legacy of my situation. And if you're not interested in a legacy, there's other strategies there where you can at least maximize your income that you're getting. Or if you're significantly wealthy, there is significant things you could do to also avoid estate tax as well. These are the things that we can help with, not just for the mega wealthy, but for us, the normal people, the people out there that just, some of us are trying to get to financial security. They don't need to increase their lifestyle. They just don't want to decrease their lifestyle in retirement. They want to maintain it. This is what we do. We focus on the mass affluent folks. And that's for people that their goal is just trying to retire. That's who we want to help with. I grew up in a blue-collar family, and that's all that we care about. We cared about health over wealth, being a good person, and just feeling secure. Folks, if you need help with that, we would love to do it. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird, where we can help put a personal assessment for you, yet again, to answer the questions that you may have and to relate this show to your specific situation. Folks, that was a fast show. I want to thank you for joining in with us this weekend. Feel free to reach out to myself or any one of my colleagues at 855-963-2526. That's 855-96-FALCON, like the bird. And feel free to look at our website at falconwealthplanning.com. That's falconwp.com for short. And feel free always to tune in every weekend on Spotify or on Apple iTunes podcast, where you can get this show and any one of our previous show. And remember, if you have a question, send it to radio@falconwp.com. That's radio@falconwp.com. Folks, I want you to thank you for tuning in with us. Have a great weekend, and God bless.